Hey traders, what's going on? Jamie Setley here. It is a March 20th, 2019. It is the spring equinox actually today and a full moon. So people could get a little crazy, which means markets could have a change of pace here. But let me know that you can hear me first. It's all good, says Peter Good. All right, well, let me tell you, I miss you guys. I didn't do a webinar last week. I had waited to do it till Thursday, and then here where I live in St. Louis, we had a massive wind storm blow through, literally, and there was all kinds of trees down, and my internet went out, and it was quite a pain. So let's get started. All right. So I just mentioned the whole thing about the equinox, right? And having a full moon. The equinox is important in the sense that sometimes it's not necessarily a change in trend, in price trend, but sometimes it's at least maybe a change in volatility. So what I mean by that is we've been in this slow grind. I would say really in the dollar, it's really been since June of last year when the price action has been, for the most part, subdued, right? To put it nicely. So here's where we are. This is a daily. If I scroll out to a weekly, I think it's important not to forget this parallel, okay, based on the trend line from 2011, 2014, because look at all the price levels that cuts through and its resistance so far here in 2019. So I'm still thinking that the eventual, bigger resolution is lower. But that said, as we come into FOMC, we are sitting right at support, okay? I mean, we're right on it. So this is a 200-day, 50-day. They are, more or less right at this, very similar levels. Trend line and the short-term count, which you're familiar with, started posting this last week, I think. 5 down, 3 up. Zoom in even more, hourly chart can count 5 down and then maybe getting a 3 up, right? A, B, C. So all eyes for me are on this fib, the 618 on US dollar index, and that's going to be 12,239. Okay. So, if I were to wanted to fit this, I guess, with the coming news or something, which is never really a great idea. But if I wanted to, I could say, well, all right, we might get a little pullback and then we're going to get a bigger move higher, on Fed or after Fed. And then that'll set up for the next high in the dollar. Okay. But really all I would, I'm going to get rid of these little counts here just to clean up my chart. But all I really care about at this point is that level, okay, the 12,239, and by the way, which is basically the year open for US dollar. And more importantly is really this line here in 200-day average, because if you can break below that, that to me would be the first, actual sign, evidence that we are getting out of this, consolidation or whatever, and trying to resolve to the downside. Okay. Now, before we go any further, I do want to bring in to remind, we are actually entering an extremely bullish period for currencies against the dollar. So after this week, you really do enter for essentially through mid to late April, one of the most bullish periods of the year for the Australian dollar, okay? And you can see that Australian dollar seasonality has actually been pretty good this year. I know it feels like the Australian dollar hasn't gone anywhere, and actually it kind of hasn't, because we opened the year at 70.54 and we are trading 70.93 right now. 70.56 I think is the low of the day. Euro, which don't have as much data for, but you'll probably actually see it better. We'll just look at DXY. So DXY, kind of similar, right? DXY, really the seasonal top is really after March. So it'd be after next week, and then you kind of go into a bearish period through, most of April, sometimes into mid-May, depending on the look back. This would be the 30 years up here in red, right? And then down here, you've got 2015, 10, and 5, right? All these charts, as you know, are on the website. You just go to the swing page and you can long-term charts, and then it's on the right at seasonality charts, okay? All right, moving on. So we've got that. Even pound. I say even pound because, as we know, we've got the whole Brexit shenanigans and blah, blah, blah. I'm just not comfortable with this stuff and trading it. I will point out levels. I'm fine. That's fine. But in terms of trusting them to hold or whatnot, it's just not my thing. So I'll go over the chart in a little bit, but Brexit stuff, if you want to do an options trade, maybe you could do that. In fact, probably wouldn't be a bad idea because implied volatility has actually come down a lot in the British pound. So options aren't super expensive. The same thing, kind of bullish seasonals up through April. Kiwi, bullish seasonals, same thing, okay? Through most of April. Looks like very much like Aussie, not to be surprised. Canadian dollar, seasonal top was actually last week. So you can see that we do have a lot of seasonal stuff going on here. Seasonal top in Japanese yen is actually the week after next. So first week of April, and that's the seasonal top all the way out until October. Okay, and this actually is the kind of mirrors or I shouldn't say mirror, but is more or less the same as the global risk asset top. So like crude oil tends to top out in late April or May. Equities, as we know, generally tend to, the weakest period, right, tends to be May through September. Right, the sell in May and go away thing. There's actual reason for that. So we are entering, starting with today, which is the spring equinox. We are entering a very interesting time where you tend to have kind of, different at different times, right, over different intervals. But you tend to have kind of a starting of the peaking out process in risk assets a little bit, right, and that goes out until the autumnal equinox, really. So, all right, seasonals, I just thought that'd be important to get a grasp on because there are times of the year, right, when seasonals tend to be important, and this is one of those times. Okay, so let's take a look at Euro. I know that everyone here is probably familiar with the analog that was posted last Sunday, which I thought was pretty damn cool. It is an analog that I've been following for years. And this is it, right? So this is if I go to a weekly chart, here you go. So it's the inverse of price action back to 2003. So take this, mirror image it, move it over, and you've got essentially a map for seemingly ever. What this is suggesting is that we are higher up through April and maybe into mid-May in Euro. Okay, that it's been great for a while. Might as well follow it. So and then we'll have to reassess. It doesn't give anything as far as targets are concerned, but we can deal with that. So let's go to, I'm just following this stuff. So clean this up a little bit, but I'm still following this. So this is a 4-hour chart, okay? You do have, if we were to look at this from a kind of a classic charting perspective, right? Look back to here. You got back to the high in Jan. 1, 2, 3, 1, 2, 3, 4, 5. This is kind of a wedge, right? You've got this wedge. And the line right here that I will highlight and say red or something, right? Okay, we're kind of trying to break through it right now. So if we do break through this after the Fed, then you're going to be saying that we have a wedge break. Okay, at that point, here's how I would approach this. I would be looking for support at some point in the future, okay, whether probably the next couple of days or something, on the top of this median line, because it's been resistance, right? It's actually been resistance since last Wednesday. We're going on a week here. This is the 13th. So it's been very well-defined resistance. Been kind of hoping that we get a pullback, and I'd love to see the pullback, on Fed, right? Get an FOMC pullback, look for support, maybe on the 25 line here, right? Maybe lower, not sure. We'd have to, take it as it comes, but I'd love to get that pullback. We'll be paying a lot of attention, of course, to the US dollar and where it is, if it's, if it's on the 618. But here we are, we're back into month open 1370. But yeah, that's the game plan with Euro is if we get up to here, right, that's your big level, about 114 or so. You'd be looking for support at this point on old resistance, which is the median line, okay? Cable, I just put up that chart, but just following here, okay? You've got essentially just trading in between these parallels. It's based on the fork all the way back to the August low, okay? So you can see the resistance up here a couple times and pretty decent support a number of times over on this one, okay? And we just hit it right at 31.46. Again, not something I'm too interested in here. You start to get super clarity maybe on this trend line down here, which would be in line with, say, the 200 average on the 4-hour chart, a little lower, especially if we get a strong dollar reaction. Otherwise, just kind of stand aside, right? I mean, Brexit stuff is, for me at least, it's not my forte to trade. Look, if we start to see a nice little base over here, okay, then that might be something to trade for a breakout, because we do have fairly well-defined levels. Again, this to me would be more of an options thing probably than a spot trade. Okay, dollar yen. Trying for a wedge break here, right? And I did note the seasonals don't tend to top out for another few weeks. But if we get the wedge break, especially from the level that we're coming from, which is, to me is kind of an important level, right? This is that kind of that 111.60s, which was highlighted last night. If we can get below there, you'd be looking for a short entry. So, this is one to obviously wait for the Fed. But if we get the wedge break, you probably get maybe a little 111 bounce, get a drift, maybe try to short it up around 111, 30, 111.38, by the way, is the month open. And then you'd be looking down towards this 110, 110.20 area, which is simply old resistance. from January and old support from February, okay? And trend line from these lows over here, 110, right, and 131. So Jan trend line down there with well-defined horizontal levels as well. You say, Marco says, isn't it a bit long to be considered a wedge? Sure, you know, I mean, I call it a wedge. It has a shape of a wedge. I'm gonna give you a different example. Let me give you another example. One of the best wedges ever, which was probably longer than this actually. Let's go to the Australian dollar on a daily chart. I would term this a wedge over here, and this lasted for quite a while. Right? I mean, from low to high, you were talking almost 3 months. So we're probably about there now, aren't we? On dollar yen. This is back in 2013, by the way. And this is the kind of action that you kind of want to see if you're gonna call if we're in a wedge. You know, kind of a powerful reversal, right? Break the wedge, accelerate lower, a little consolidation. Okay, whatever, you get the idea. So going back to dollar yen. We are going, by the way, because we're on the yeah, you're saying, Marco's saying in comparison with previous downturn, it's not that long. All right, well, look at it in context of look at it in the context of the look at it in the context of the pattern. So when we have it this way for dollar yen, this is all a sideways pattern, right? Especially since Brexit, right? A, B, C, D, E. Bottom line is we can call it whatever we want, but to me, this is a rising market that's, you know, that is contained between two converging trend lines. And in my book, I call it a wedge, right? Rising market between two lines, well-defined lines. I mean, it's pretty hard to argue that this is not a well-defined support line, right? So tops also hit. So if we break this, my focus is lower. And am I assuming that we're going to go back to the lows? Because if it is a real wedge, right, then you're actually looking for a test of the lows. I'm not assuming that at all. I'm just saying that if we break, focus has to be toward the next level, which is going to be this area over here that's sandwiched between these two horizontal levels, which is again 110 to 110, 20, 25. Well, I just got an alert on crude. Oh, means we are hitting a level on crude oil. Hold on. Yep. All right, heads up. Crude just hit this level from March of last year, actually. The low from March of last year is right now 59.95. Converging trend line is a little higher on 61 bucks, but just a heads up on that. All right, back to our regular scheduled programming. So we are looking at dollar yen as we don't have to call it a wedge if we want. We'll call it, we are sandwiched between two converging trend lines, and to me it looks like a wedge. So if we break below it, that's bearish. Until we break below it, I'm not really anything on this, right? Can do whatever it wants, and I will just ignore it. All right, let's move on. Kiwi dollar, this is one that has, I think, a well-defined, extremely well-defined pattern to work with. It's one of the only majors, I think, that has a really solid pattern to work with. If we got the initial spike, by the way, on the dollar, like, you know, today on FOMC, if we did spike higher initially on the dollar, that would be a great thing for this setup, because what we'd be looking at, so we have an A up, right? Since then, since the high in December, obvious triangle, right? A, B, C, D, E. It's also possible that we actually tighten up even further, okay, and end up somewhere over here, God forbid. But all the pieces are in place for an eventual upside break, also with the seasonality, right? So here's the daily. I would call this line here, which is simply the old channel line from this, from the 2018 highs, okay, extended off of the low from February 8th, right? That level's been resistance since December to the tick, right? Very good resistance in January. That's going to be around 69, like really right at it. So 69 is your key level, above there, and it's time to get, you know, really bullish, I think, for a move as high as we'll be talking about this line here, which is the trend line from the 2018 highs. That's going to be all the way up around 71.40, 71.50. We don't really need to think about targets. Let's just think about, you know, executing on a breakout at this point. But near term, we could have the flat that we talked about last week. So, you know, wave up, right? 1, 3 down, 3 up. And then let's see if we can drop underneath this low here at 68.08. And if we can, then you would have a flat pattern, A, B, C, and you'd be looking for a low probably right around 68, frankly. It probably would not be much further below that 68.08 level. So 618 is 67.94, but just all you need to get this is below 68.08. You could have a flat, and then we'd be looking higher. So it's a lot like euro in the sense that we're looking to either buy a little lower, because we could complete, you know, a pullback from over here, or we have to pay attention to 69 for a big breakout. Okay. Australian dollar and dollar CAD, I don't have much in the way of pattern stuff here. You know, the Aussie dollar, you have this fork, and I mean, it looks weak as hell, doesn't it? I mean, just looks terrible. Like, we had the possibilities to get something going on the upside, right? After we had this big flash crash in January, we had this strong rally, impulsive rally. We had a 3 down, a 3 up, a 5 down. At that point, I thought we had a flat completed, right? But the rally from there didn't do much. You then had this day, actually, that huge reversal day over here. That was actually, you spiked higher on that, remember, on the jobs number in Australia. And by the way, jobs number is tonight in Australia. Then the whole thing reversed. And since then, you know, it's just meandering in like a very, very slow downward sloping range. So, you know, there's all kinds of possibilities here. Like, you had this head and shoulders, right? Shoulder, head, shoulder. You had the breakdown, okay, over here on the 6. Of course, the breakdown didn't last. So you could say, well, we had a false breakdown, right? But after a false breakdown, you'd kind of like to see stronger price action than this. And this rally, frankly, is kind of pathetic. So, you know, it's okay just not to have an opinion. And at this point, I just don't have an opinion on the Aussie, okay? I'm going to let it figure itself out. And once it shows something, I will have an opinion. But at this point, I'll point out some levels to pay attention to. Really, the levels to pay attention to at this point, I think, are probably 7140, 7150, especially 7150. That's the, but we're splitting hairs here. That's how tight this range is. But up here, that's the center line, right, from this fork. Okay, and by the way, that fork is drawn off of the July 2017 high, not the high from September 2017. So you've got that. That's an important level to pay attention to for obvious reasons. It's been big resistance. It's been support, and it's been resistance recently, including exactly a month ago on the 21st for the jobs number in Australia. So that's a level to pay attention to. Also, you've got to point out that 6970 area, 6960, 6970, which is an area we've had in mind forever. It just hasn't been reached, right? That's the 2 equal legs down. It's also the 618 of the flash crash, low to the high. And yeah, at this point, those are the 2 spots that I would pay attention to. Okay. I would have an opinion here if, say, this rally were a little more, clean. Like if that was a 5 waiver, right? I mean, this is pathetic. I don't, you got 5 up, drop. I don't even know what to call this. I mean, there's just no structure to it whatsoever. So I'm not even sure why I'm looking at it so much. I'm sitting here like making fun of it. Doesn't make any sense. All right, move on. Okay, dollar CAD. This one, we've got some decent levels. Short here, it might be kind of, there's all kinds of possibilities. Level to pay attention to on today. And maybe, might be getting out of this short trade, which is frankly probably kind of stupid, right in front of FOMC. But I had in the back of my mind the seasonals and the fact that, you could get 2 equal legs and get down towards the bottom of this support zone, which would be 3150, 3170. And being in an uptrend in crude oil, but that apparently hasn't mattered forever because crude is ripping and we are almost at 60 bucks and dollar CAD is still doing what it's doing. Anyway, pay attention to today, 32.86, okay? 32.86 is a level. I would also pay attention to around 33.90. Those are the 2 spots to pay attention to today. So you've basically got 32.90 and 33.90. Here's why I think the first level is kind of self-explanatory, right? We already know why 32.90 could be important. Lows, median line, right? Top side of this trend line, call a neckline, if you will. But here's why 33.90 could be important. So you've got 5 down here. This could be a flat, so you could go A, B, C. Seeing a lot of potential flats here. And again, this one would jive pretty well with the initial kind of reaction on the upside for the dollar on FOMC. And your 618 is 134, okay? And 33.90 is just that spike low there from 3.8. So that's why I'm saying those 2 spots are important. If I zoom out, you can see also 33.90 is the level over here, okay? June high from last year. So, and of course you've got the parallel. So basically we're just looking here. In order to get out of this, have more of a directional view, really, you've got to break this median line. You've got to break it. And at that point, we could start to talk about, maybe riding with the seasonal weakness in dollar CAD to much lower levels. Until then, it's just like the Australian dollar. There's a lot of possible patterns, but nothing really sticks out. And, when we look at other crosses, frankly, you know, this is the EuroCAD chart, right? I mean, EuroCAD actually looks pretty bullish. So it could be that, the Canadian dollar, if we are going to go to an eventual weaker dollar, that this is actually not a great way to play it with the Canadian dollar, right? It might be better to stick with euro and just kind of nibble on levels in the dollar CAD rate. So yeah, I mean, going over these majors, you can see that really the only ones at this point that I think have tradable kind of patterns for me would be the New Zealand dollar, right? The clear triangle from December, looking for that low, maybe just below 68.08. Dollar yen with the converging lines here, wedge-like formation, which if we broke, we'd be looking initially towards the 110 area. And then, of course, euro, which, big inside week last week and possible wedge formation to trade. Level at 114 is clean. If we pull back, you're probably looking for support around 113, right? And then you've got Aussie and CAD, which frankly aren't making a whole lot of sense to me. So no patterns there to trade. Okay. Let's spend some time here with some equity stuff. Stock markets. All right. The never-ending stock market rally, okay? So a couple things. We talk about daily reversal support and daily reversal resistance. That's again, the high week for a move, right? Or the low week or the low day, right? Just a low period. And then the close of that bar. So in this case, this is the Qs, right? QQQ, basically the NASDAQ ETF. And what do we have? We have the high this week at 180 on the nose. That close is 180.15. That's really close. You've also got the old trend line over here, which actually be a little higher. So you do have those levels up here to pay attention to. What I wanted to get across, though, in terms of at least on the S&P here, is that go to a weekly, probably see a little better. All right, so if we can close a week out, I'd say under 2,800. That to me would be kind of a bearish development, right? So 2,800, you've got, resistance over here from March of last year, support over here in July, high in, December. And if you can get close below there, that to me would be kind of an important near-term development. So as it is right now, it's really up in the air. I can throw out all the stats in the world. You still have, by the way, if we look at this is NASDAQ, right? And this is NASDAQ breadth in pink. This is the advanced decline line. You can see that we've got actually 30-day breadth is actually close to going negative fairly soon. That doesn't happen a whole lot, especially after coming from up here. So we still have this massive divergence with the AD line not making a new high, right, as the NASDAQ has been doing, the composite. So, that's still there. It's been there for a while, right? That's been there now since essentially whenever we made a new high, I guess it was 312. So we still have that going on. You've still got, sentiment obviously being, pretty nuts. I know DSI was 90 before yesterday's decline, if you can even call that much of a decline. Also wanted to point out transports. So there's a saying, and don't laugh. Actually, you can laugh. Trannies never lie, right? The Dow Jones transports. Okay, so transports are in blue. Look at the action ever since we started kind of this different period of back and forth of wild swings in the equity markets. Okay, tops in January, early January, actually January 12th, in the transports. Fell off a cliff, starting with equities, of course, not until January 26th. Transports topped back on September 14th, again on the 21st. And really the market really didn't start dropping until October 3rd, right? The general market, so to speak, right? And this one is really crazy. So here we are now. Transports topped over a month ago on February 21st. And are in fact right now on the verge of breaking their lows from March 8th. Okay, and yet the NASDAQ, the S&P are way up here. So, the transports are telling you that not all is well, and that's been the case. This dynamic has been like this for a while. So, timing wise, what have you, you probably got to get below that 2,800 level in the S&P, and then I think it's probably game on. But it's tough to have confidence in fading a market like this. But I'm trying to give you all the evidence I've got, and rather than just be emotional about it. Wanted to also address, we had some questions yesterday or on Twitter, remember, about the volume stuff. So here, for example, this is the S&P 500 futures, and what we're plotting here is the highest volume in 120 hours. Okay, that's basically a rolling 5-day, for a 24-hour market, it'd essentially be 5 days. I know it's not really a 24-hour market because you have there's like a 45-minute break, but you get the idea. So we look at the volume levels as simply points of reference. So, the volume level here from the 15th, the close of that bar was 28.28. Okay, that was the highest volume level up until the decline we had yesterday into the close, right? And that volume level, that close, was 28.40. Well, you can use those levels as kind of, reference points. So like 28.28 was actually the low last night in Asia. It's right at that spot. Or 28.40, 250, or 2.5 handles above 28.40. That's a really good example of the high volume levels. Okay. Let's see the Qs. Let's look at. We can do this on a longer term basis too, right? It's not just like for hourly. You can do it on, I look at 52-week high volume weeks or 13-week high volume weeks, or even say, 20 days or 60 days or whatever. Okay, so here's the NASDAQ. So here's NASDAQ high volume level is still from the 15th at 9 a.m. And you can see actually that high volume level has been support ever since. So support, support, support. So that's going to be 73.27. Point being is if you get below there, right, first of all, you just want to be aware of it. If you get to it, first of all, just be aware of it as the level that, if it's broken, it'd be viewed as kind of important, right? Because it's not just totally random. Like here's a good example of it. Okay, 3-4, high volume level right there. You came into it, you held it initially, kind of screwed around with it. Once you broke it, it was kind of game on, right? So you're knowing like where the important pivots are potentially in the market is what I'm getting at. Okie dokie. What else do we want to look at? I was going to say, oh yeah, I was going to say we should probably, you know, we should look at. I wanted to pull up the Shanghai Composite for one. So pretty important market here. Shanghai Composite daily chart. Here's the big drop. Okay, the big rally we've had this year. Neckline. It's actually, so that chart from last night of EWA, which is the Australian ETF, equity ETF, kind of similar, right? In terms of the neckline that we did hit. Remember, this was EWA. I don't know, they have a spike on here for some reason, which is not real, because I know this is not a real spike. I don't know why that's there, but it's a bad tick. But yeah, same thing. This is EWA. There's the neckline, right? This is the same chart from last night, just a different platform. And this is actually one reason why I think the Australian dollar could be hosed for a little bit, is this chart. You know, we had this chart compared with the Australian dollar, right? So we've had a big disconnect, but you can have, you know, we have the Chinese market and the Australian market, you know, both equity market levels, you know, at really important resistance levels. And the Australian dollars lagged badly, right? Really bad. So we've seen this. We saw this playbook last year. Like Australian dollar would consolidate, and wait. And finally, once you started to break down in the equity market, Australian dollar went with it, right? Australian dollar went with it again. So let's see if that happens. You know, we got to look at each chart, you know, on its own merit, of course, but just trying to put some pieces together here. You know, it's tough when the market is this quiet and there's no range, and it's, you know, but hopefully, you know, again, with the equinox today, that changes. Can't be like this forever, can it? All right. I will look at dollar Swiss, Marco. First, I did want to, you know what? Actually, we'll just do dollar Swiss right now is what we'll do. All right, let's go to dollar Swiss. And then I wanted to show you Microsoft and Apple, because those are stocks that have the biggest influence on indices. So, you know, not enough people do that, where they, you know what's going on with some of the big individual names, and that's important. Oh yeah, so Mahai asking about gold, sure. So I'll do dollar Swiss, gold, and silver. Okay, dollar Swiss. Here we go. Let's start with this weekly. There it is. So here's the log chart of the dollar Swiss exchange rate. Big level. I know a lot of people keep waiting for the biggest breakout ever, and it's not seeming to happen. Not saying that it won't. In fact, that if we look at that euro analog, it might for a couple months. So for me, with this, what I would be looking at in terms of dollar Swiss, so you have talk about a wedge, you know, a wedge potential. I mean, this thing is, I figured that we would try to at least test that 101.75 level, especially after ECB. 2 weeks ago. That was the high from March of 2017, actually, funny enough, and did not do it. But as it is right now, your level to pay attention to down here is going to be about 98.60. Just look at that trend line from the February low of last year. That's the big test. You know, if we zoom in, you know, I think it's pretty, I think you see those highs over here. So right here, and then kind of little support over spike up here. I think that if you do get a bounce, I think 10060 is going to be decent resistance at this point in dollar Swiss. So I'd be looking at, say, 10060 resistance, and then looking for 9860 or so. And then if that breaks, then you have a much more important high in place. This reminds me, I forgot to look at the dollar Swedish krona. So if we look at the dollar Swedish krona, so dollar SEK is reversed real sharp. In fact, is almost all the way back to its February 28th low. Okay, that, by the way, you know, just by comparison, in euro is all the way back. That's 1420 in euro. Okay, so this is a level to watch too. You have the old triangle resistance line at 909, and 200-day average is there too, just below. So, you know, to me, where you're coming from in dollar SEK, you know, certainly potential for a bigger top here. Let's look at, for example, just look at the monthly chart. You know, the month is not over yet. I get it, but it will be over, you know, in what, 7 trading days. So if we take out this high, which we did, this 2016 high, trade to the highest level since 2002 in the dollar Swedish krona, and we put in a monthly reversal bar, you know, that would be a pretty bearish dollar signal to me, at least for European currencies. So, you know, that is something, you know, just to be aware of. We'll come back and look at it in 7 days. But, you know, continue to see all this, you know, we're gonna get a break in this dollar at some point. You know, it's gonna happen, I swear. So, all right, there's something to be aware of too. Okay, look at gold and silver. Then we'll show you the stocks real quick, and then I gotta run. Hold on. All right, let's see, metals. Okay, silver's still cleaner to me, by the way. You can see it right here. If I look at the silver market, I'm counting 5 waves up and an ABC decline. And if I go to an hourly chart, not the prettiest thing in the world, but, you know, A, maybe, you know, or sorry, A. It's either A or 1, and then sharp A, B. We should drop again in silver if we're going to do A, B, C. So in silver, I'd be looking for essentially a drop that goes below the low from, what is that, the 14th? So below 15.13.5, and then I'd be looking for, well, a low again. So you're looking for a higher low against the low from March 7th. Take it higher, okay? That's my setup, so to speak, here in the silver market. Okay, let's go then to gold. Don't have as strong a handle on this. Gold, in fact, to me, looks like it could actually be a bit bearish, especially if you get up towards that 1323 area at some point, right? Because you have impulsive weakness here, probably have an A, probably working on a B, and then get a C wave up to 1323, okay? So they're very much not in tune pattern-wise. You know, clear 5 waves down. So you have to be looking for a lower high in gold against the high up here in February, and then look lower All right. So I guess put it this way, I'd be looking to trade silver on the long side on a drop below the low from the 14th. Okay, but then I'd be looking higher. Probably want to, I'll try to point out resistance if we do get that move. But then with gold, I wouldn't want to try to trade on the long side here because this is kind of a weak looking rally, and it's, after a drop, a rather impulsive looking decline. But I would be looking for resistance up around 1323. All right. Okay. Microsoft. This is a weekly chart of Microsoft, and this is the channel from the 2009 low. We hit that channel resistance last year on the highs, and we're right back at those levels right now, but you've got some pretty big divergence up here, like on the weekly chart. So, might be in for a bit of a downside move, but just did want to highlight that your upper channel level is higher. Here's another look. This is a daily chart. And then Apple. So we all know the Apple chart, right? It's a really good looking chart of Apple. And from the 200 week to the 50 week average, and we're right on it. This is the channel from 2013. Center line, 50 week average, big spot. So I think you do have to look lower in Apple right here. But again, be looking for, you'd probably be looking for support after a pullback. But that's getting way too ahead of ourselves. Let's just take it one step at a time. Okay. So big level here for Apple. So those, Apple looks like it's at resistance now. Microsoft, not so sure. But the momentum on the weekly is not great. And those are kind of the two most influential stocks in most of the indices. So kind of good to know that. All right, I got to go. I'm gonna wrap it up. Go get some lunch or something. Get ready for FOMC later. And everyone have a great rest of your week. It's good to be back. Sorry I missed last week. Really kind of out of my hands, out of my control. But have a great one. And I'll get this archived as soon as I can. All right, take care. Talk to you guys later.